Welcome back to the channel, everyone. Today I want to talk about the 29 billion shares of AMC that have been traded this year. Not 29 million shares with an M, but 29 billion shares with a B. I also want to talk about Citadel's new bond issue, so stay tuned and let's make some money. You may notice that this video is a little shorter than usual, but I have jam-packed it with juicy information. I mainly wanted to come on here to say Merry Christmas, Happy Holidays, and show you the next hat in the lineup. But now let's dive in with the key information. So, Hang Loose says that almost 29 billion shares have been traded in 2021. That's almost 70 times the free float. And looking at some regular stocks for comparison, and bear in mind these are actually some volatile regular stocks, and I'll show you some of the less volatile stocks later. So Tesla has only had 7 times the float traded this year compared to AMC's 7T. Pfizer had only 1.5 times the float traded, Nvidia 3.5 times the float, Palantir 7 times the float, and Snapchat 3 times the float. And he says this is clear evidence that AMC has been under a massive attack from high frequency trading. If we have a look at the yearly chart for AMC, we can see just here, the volume for this year has been 28,723 million shares, or 28.7 billion shares. You can also see these dark grey bars down here, which is the volume, and this very, very large grey bar here for 2021. That's because around 10 times the amount of shares have been traded this year compared to 2020, and say, I don't know, 20 to 30 times the number of shares that were traded in 2018 and 2019. Cable Monkey actually ran the numbers on this, and 28,723 million shares divided by 260 trading days this year is 110 million shares traded per day on average. Over 5 days, that means that 552 million shares have been traded per week. So basically the entire float has been traded every single week this year. Now obviously I think this is a clear sign of manipulation because 80% of this float is locked up under retail ownership and we are not selling our shares, and therefore this millions and millions and billions of trading volume has come from the remaining 10 or 20% of the float that's just been traded back and forth and effectively used to ladder attack. Lou vs Wall Street actually reposted this photo from Reddit showing the number of shares outstanding for a number of companies like GameStop, AMC, General Electric, Apple, Microsoft, Google, Amazon, and many more, and also the number of shares traded. So for many of these companies like General Electric, Apple, Microsoft, and Google, they have only traded so far this entire year around 87% of the float, 72% of the float, 45% of the float, 25% of the float, and so on. So even giant companies like Apple, Microsoft, and Google aren't even trading the entire float of shares in a single year, whereas AMC, on the other hand, has traded 70 times the float in the same time frame. Also guys, today is your last day to get the free iPhone 13 Pro and many other goodies given away by Moomoo every single day this month until Christmas, which obviously is tomorrow. On top of that, you also get the 5 free shares valued up to $17,500 just for signing up with Moomoo using the link in the description below. You get the first free share just for opening your account. You get the second free share for making your first deposit of any amount, even if it's only $1. And you get the final 3 remaining free shares if you can deposit $2,000. And obviously be sure to deposit at least $100 and check back tomorrow morning to see if you've won that final iPhone 13 Pro and the other goodies as well. Now I also want to show this clip of Jim Cramer explaining how he would spread negative rumours about Apple to journalists. I've never actually heard this clip being played before. I have heard him talk about how he would short stocks, but I've never heard him talk about specifically how he would spread false rumours about Apple to different journalists.
And this is very easy because the people who write about Apple want that story. And you can claim that it's credible because you spoke to someone at Apple, because Apple isn't and it doesn't.
Right, they're not going to comment.
Then you would call the journal and you get the bozo reporter. And the way you would do that is you pick up the phone, you call 6 trading desks, and you say, listen, I just got off the phone with my contact. There's no room for Apple. They want too much. We're not going to let them in. We're not going to let them do what they did to music. And, you know, I think that's a very effective way to keep a stock down.
Right.
And the best part about all these strategies, it's that it's hard to prove, and the SEC are too incompetent to prove it.
The way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game. Okay.
It's crazy how Jim Cramer talks about spreading false rumours to journalists and then also says that you have to get it on CNBC as well. And now, funnily enough, where is Jim Cramer working? Oh yeah, CNBC. It's crazy how this kind of manipulation goes on from Jim Cramer, Charles Gasparino, and many other news reporters, and they don't ever face any fines or backlash from the SEC. It just goes completely unnoticed and completely ignored. Now, I also wanted to talk about some bonds that Citadel issued a little while back. Citadel offered $600 million worth of bonds back in 2019. Groups like Standard & Poor and Moody's rated these bonds as mostly junk, BBB or Ba1. Fast forward to last month and Citadel's bonds are up for review again, where they'll either downgrade them or upgrade them. When Moody's reevaluates these ratings, they give specific criteria for what would trigger an upgrade or downgrade in these bonds. Now, this specific criteria is very specific to the individual company and it's actually published for all to see. For example, Moody's had this to say on Raymond James Financial. Raymond James's rating could be downgraded if the firm were to adopt an aggressive financial policy due to significant increase in dividends, stock repurchases, or a large debt-funded acquisition. And then a month later, they actually announced that share purchase, basically in line with what Moody's said, because they were already discussing with Moody's this share repurchase prior to them announcing it. But so what about Citadel's downgrade criteria? Well, Citadel and its subsidiaries' ratings could be downgraded if its profitability sustainably deteriorates or if there is evidence of a significant failure in risk management and controls. That was said in November 22nd of November 2021. Now, I wonder what sort of stress scenarios they might encounter or might just be about to encounter that could result in a significant failure in risk management or significant drop in profitability. Basically, what might cause them to take on massive losses and basically crush their models. I don't know, maybe something like an AMC run-up or an AMC squeeze. And interestingly, Citadel upsized their debt and took out an additional $1 billion back on January 27th, 2021. So clearly, back in January, Citadel were very stressed for cash. Now, I also want to talk about the OBV correlation with the AMC stock price and when that's diverged in the past and what happens after that divergence. You can see here in red and green the AMC price chart, and in blue you can see the OBV, which is the on-balance volume that I spoke about in a few videos ago. Obviously through May and June the OBV and the price was very close together. At some point here in July and August the price started to move lower than the OBV and there was that divergence, but it very quickly shot back up and caught up together. Right now the OBV is running, but obviously the price has been falling, causing a massive divergence. It wouldn't surprise me over the next few weeks or the next month or two if the price suddenly catches back up to that OBV and they meet somewhere around here at all-time highs. Tom says, no joke, this has massive AMC short squeeze written all over it. See how in August the OBV hovered over the price? The price eventually caught up. We have massive divergence now. The price will catch the OBV. And then when FOMO comes in, the OBV will climb even higher and the price will follow, and a big run up to match. And now before I leave you today, I just want to remind you of this. If the idea of a short squeeze was so ridiculous, just like mainstream media and Charles Gasparino say, the stock would have never run to $72 a share. The fact that they're getting so touchy-feely about the subject and why Charles Gasparino is setting his lawyers on us for no reason is proof that the MOAS thesis is true. If they were right and there was no short squeeze ever going to happen, why would they open their mouth? Why not just ignore it and talk about something more popular or talk about something more likely to happen? Why not continue talking about Tesla, which is always in the news? Why wouldn't they just continue to let us do our thing and continue to make money off of us and continue to ignore us? They're telling us this rubbish because we are so close and they are so desperate and so scared. Guys, be sure to let me know down in the comments below what you think about the 29 billion shares of AMC that have been traded this year, and also be sure to let me know what you think of the new hat. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.